Good morning, and thank you to QED for the opportunity to speak to you here this morning. I am delighted to have an opportunity to speak to you on what I think, and I've always thought, as some of you who know me, is a very important point, and that is the assessing and continuous assessment of the impact of regulation on the economy. First of all, let me say that the timing of this conference, at least from the Commission's perspective, could not have been any better timed, really. As you're probably aware, and as Ashley has said, yesterday was an important day for the Commission because we launched a series of very important initiatives in financial sector policy. The key initiative was the Capital Markets Union Action Plan, which was accompanied by a package of measures relevant to that plan. And one of the measures in the package was a call for evidence or a public consultation exactly on this subject, the cumulative impact of regulation. Now, the objective of this exercise is to help the Commission assess the overall coherence of the existing regulatory framework in the financial sector. The underlying objective is to strike a better balance between containing risk in the system and enabling growth. This is a theme, as Ashley has said, that Commissioner Hill has raised many times before. Now, the last years have been a period of intensive rulemaking, and there is, I have to say, still unfinished business, so it's not over. But this is, I think, a good moment to step back and review the cumulative impact and the coherence of the financial legislation that we have adopted so far in response to the financial crisis. Let me be clear that this is not about rewriting the rule book fundamentally. This is about maintenance. This is what any good financial sector policy unit does. It regulates and then maintains the regulation to ensure that it remains fit for purpose. It's undeniable that the EU financial sector is now stronger as a result of the new regulatory framework and actions taken by European and national authorities in recent years. Rules that safeguard financial stability and investor protection form the bedrock of an EU financial regulation and hence will remain, for us at least, non-negotiable. But as I said, it makes perfect sense to ask ourselves whether we have managed to get everything exactly right all the time. This was a very intensive period of legislation. We worked at speed. We worked in stressed conditions. Sometimes it was early mornings when we reached agreements. The issue is, can we assume that we got everything right? Another issue, of course, is that when we introduced this legislation, we made certain assumptions about the future. The question is whether those assumptions have materialized. And if they have not materialized, to what extent, if we knew then what we know now, would we have changed our minds? Maybe we would not, but I think it's important that we check. So, it's also, just to make the point, that it's not all about, negative. It's about also removing barriers to entry, which may have been put in place by regulation, which actually impedes competition and therefore impedes growth. So it works on both sides. We're looking for things that we may have done and not intended, or things that we want to do and the regulation is not delivering for us. Now, let me briefly explain what kind of feedback we're looking for in this consultation, which will run until the 6th of January. I think we know, and I know, that there are certain things in regulation that the industry doesn't like. We know it. You can tell us again, but we know it. What we're looking for is more precise. We're looking for empirical evidence and concrete examples from public and private stakeholders of what we have done right, what we may have not done right, and what we could do better. And we want this in 4 thematic areas. We want to have evidence of rules affecting the ability of the economy to finance itself and grow, where there may be unnecessary regulatory burdens, where there may be interactions or inconsistencies and indeed gaps, and then, of course, rules that give rise to unintended consequences. Now, it's worth mentioning here that this evidence is not only sought on the impacts of EU financial legislation. You're very welcome to send us evidence of problems with national implementation, for example, gold plating, or if there are problems with enforcement. Now, the results of this consultation will allow us in the Commission to get a kind of clearer overview of the situation of the financial sector in the EU and a better understanding of whether the recent reforms are having unintended or undesirable effects on the smooth functioning of the industry and the market. Whether there are, as we hope, these regulations are really fostering growth in jobs while preserving financial stability. Following the consultation, the Commission services will report on the main findings and the next steps by mid-2016. We do not go into this exercise with any prejudged outcome. We wait to see what we receive, and on the basis of that, we will let you know where we go. But we hope that this work will help us to identify the main issues that require the Commission's further attention and will allow us to make informed decisions. This broader consultation will also feed into the more than 100 forthcoming reviews that are built into individual pieces of legislation. And as you know, all these individual reviews and ex post valuations are essential ingredients of the Commission's better regulation agenda. We think that they could benefit from this more holistic exercise, a sort of context exercise, and that will give us a clearer understanding of how not these various reviews of piece of legislation will interact, which is very important and feeds into this important word, cumulative. Now, this exercise will also help us to develop the most appropriate calibrations for the upcoming numerous Level 2 rules, as well as the few remaining Level 1 measures that we have in the pipeline. I should at this stage add a word of caution here, because it's very likely that the results of this exercise will be preliminary evidence. I mean, parts of these rules have not even yet been applied in practice, and others have been applied over a relatively short time frame. And indeed, other rules have not even been put forward yet. So what we will get from this will be a first snapshot of where we are. And further evaluation will be useful once the overall EU legislation framework is in place. I mean, the Commission is, of course, not alone in this exercise. It will and could build on the work started in the European Parliament in 2013 to look at the coherence of EU financial services legislation. So the comprehensive review is both in line with the European Parliament's recent draft report on stock-taking and the challenges of the EU financial services regulation, and it's also in line, I may say, with work at international bodies in the G20 and the Financial Stability Board and the Basel Committee. I mean, what's happening here is that there's a new conversation taking place in these various fora about the balance between risk, reward, stability and growth. So I am glad to see today that we have a number of distinguished members of the European Parliament and indeed from the Financial Stability Board today speaking, so they'll be able to speak for themselves and give their views on what is going forward. So as I said, I wanted to keep this within my timeline, so let me just conclude by saying that I believe that the debate on financial sector policy in the EU and internationally is gradually entering a new phase, this new conversation that I mentioned. In this phase, I think financial stability must remain the key focus, but considerations of economic growth will loom larger. I think more refined judgments between stability and growth, between containing risk and prompting people to take risk, will be required, particularly when, as I said earlier, a robust recovery in Europe still remains somewhat elusive. For this reason, I think we cannot shy away from a fair and balanced reassessment of the regulation that we have put in place to ensure that there are no unintended consequences. The call for evidence launched yesterday is an opportunity to gather concrete examples and empirical evidence from all relevant stakeholders to make the financial regulatory framework even better. And while I invite you to tell us what you think we could do better, I also invite you to tell us what you think we have done well. So on that, I will conclude, and I wish you all a very interesting and fruitful debate for the rest of the day. Thank you very much.